facts from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in at December 16th, 2021, and I'm going to buy one stock. I'm buying everything. I'm just going to look at after hours is going insane. Today was wild. We have Powell. I have a lot of plays. I'm actually serious about it. We're going to go over it up and down. Don't worry. But today was absolutely an event. As you can see here, this was actually the biggest response for any FOMC that we have had all year. Even comparing it to the downside, the velocity, the speed, everything, especially with what we've went over the last few weeks, this is absolutely insane, and we got a lot to talk about. So I'm going to go over everything that happened today. I'm going to give you a breakdown on what happened there with Powell, what was hawkish, what was, that's the bearish, hawkish, bearish, and then what was bullish or dovish, and how the market's interpreting this and why. There's a reason why this reaction was so big. Again, we had a lot of expectations, and you really got a pleasant surprise today, but there is still a lot of questions that have to be answered. We're going to see if the Santa Claus rally is back, and we're also going to see how people react tomorrow. Remember, we've kind of been pump faked a couple of times, so there's a lot of important stuff. The market is active. We should see another crazy day tomorrow, or at least to the end of the week, so I hope you're ready. But I got the plays for you. There's a bunch that I'm looking at tomorrow, but we also made a lot of trades today, even flips. We got to take profits on some puts, and then this is what I want to highlight here. We have a lot of open trades, so I'm going to go over every single one of these open trades that we've made all month, how they're stacking up, and what we plan to do with them. So a lot of those are on the call side, so that's going to be interesting tomorrow, but we got that, and then everything for the rest of the week. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes for open. It's the first link in the description, and it's pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life, and yes, if you want to get your brand new, then yes, we are the place to be. And the most important thing you need to do, post your watch below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. So, right off the bat, I'm excited. Can you tell? I'm excited for you. It's going to be exciting the next couple of days. But today was not the same old Powell. So we talked about it yesterday, whether we were going to get the same old narrative or whether or not he was going to U-turn. But you got a little bit of the same Powell. There was a slight remix, but there was no U-turn in sight. So people were worried about the Fed stepping on the brakes or at least scaring people. They managed to get us with a hawkish tilt. Even though the expectations were Powell was going to tighten, he went above and beyond. He went beyond any expectation people had, but the way they did it and how they framed it, and even the press conference, it was very good. Again, it's hard to say right now. It looks as if he towed the line, but it is still very early. That's why these next few days, we will see, and ultimately why today's reaction was so big, because what they are doing today, we're going to talk about this in June of 2022, so remember that, all right? But this has a lot of leading effects and indicators. That's why some people may be piling in here even throughout the days. We'll see. But to give you the breakdown, it was hawkish because they did double the pace of the tapering. So they said they are going to double the amount of bonds that they're reducing. They're going to buy less bonds on the open market and then another 10 billion less of the mortgage bonds. So they're tapering at a faster pace. And this is why it's important, because initially, as of last Fed meeting, they were supposed to end the tapering in June. Now it's supposed to end in March. And now there's a couple of things moving around with the expectations. There's the market expectations, but now even the Fed, their median dot plot showed 3 rate hikes in 2022 instead of 2, and then pretty much a lot more in 2022 and 2023. So this was the hawkish part about all of it. I'll come to the first pretty picture here. This is what the Fed dot plot looks like, and we got this before Powell had the press conference, but what you could see here coming into 2022, essentially there's only one person who is expecting that the rates are going to stay low. So you could see most, if all of them, again, a lot of them agree by 2024 and beyond that you're going to get rates at a higher price here. And you can see in the beginning, they were all unanimous, but the dot plot is showing you, it's again, you don't know who is who on the dot plot. So we don't know who this guy is. We don't know who the super dove is. That's all of their projections. You've probably heard them talk about it, but this was the hawkish part about today because it's showing you that a majority of the people on the Fed are saying that, yeah, we're going to get a lot more rate hikes and rates are going to be, again, this is right below 1%. So that's more than just one rate hike by 2022. So this is why it was very important today. That was the hawkish part. Again, we still got to watch how the bond market and a lot of people price things in. But now to the dovish part, it was dovish because the dot plot is just a median. It is not a plan. And Powell made that clear. And then he also gave his next target. It's pretty much employment. So this was the now artful Jerome Brady that we know because he found a way to speed up the tapering. Majority of the Fed, they're like, well, yeah, we think there's going to be more hikes, but the dot plot is not a plan, and he's addressed this many times before, so it's good signaling, but it gives him the flexibility to back out of it, and then now he has attached the next point to employment. He pretty much said, we're waiting on employment. That is when we're going to hopefully be done with tapering and then begin the liftoff, raising rates, and that's the stuff that would probably negatively impact the market. So if you remember what he did last year, it's just like inflation. They said, well, once inflation does this, once employment does this, and then once we know for sure it's going to be like this, he's giving you these data dependent stuff. So it gives him flexibility. And this is why if there is a very bullish rally, if the market buys the dove analysis and everybody focuses on it, this is going to buy at least 1 month, maybe 2 months, or even the whole quarter of time, because now this is going to be the expectation. This is what people are going to be looking at. And at the very least, Powell will communicate. So now taking all of this into consideration, this is one of the biggest part of Fed credibility. Powell even said it today. He said, I let you guys know. He said, we want to make sure we let the market know. He did tell us, even though it was just 1 or 2 weeks before at a congressional meeting, he made it clear. He said, no more transitory. He made it clear, kind of how things are going. He said, it's no coincidence. He said, it wasn't an accident. You heard other Fed members talking about increasing and speeding up the tapering. So that one was very interesting. But overall, this just totally helps his credibility because now the market knows, well, if he's not just going to step on the brakes, he's not going to cause that Bernanke 2013 style tantrum. I mean, this is too elegant based on what he's doing. He may just give us a week notice at the very least, but he is going to tell us now. That's at least what I'm getting out of it. And we know what he's going to be looking at next. It's going to be employment. Even if they want to stall, they are going to use that employment data before doing anything, or at least that is my assessment. So there's still a lot of questions. Again, we're going to figure out over the next few days that you're seeing how the market reacts, and this is going to free up some volatility here. But, now we just have to ask, how is Powell going to meet these objectives? How is employment going to get there? How is this going to play out if prices are going up at these, record rates? Is it going to hurt stuff? That's the first question. There is other stuff with the virus. He addressed it. It seems like they'll have that under control. But then now, too, we also got to ask, well, how open-ended is his employment target? He's saying once we get to full employment recovery, and now if you look at it on a broad base, we're already there. That target's not met. But then if you look by different demographics, different geographics, and all over the world or all over the United States, different areas and different pockets, you're getting a different, a lopsided recovery, as Powell would call it. That's the real question now, because is that what what's he going to base it off of? It might give him more flexibility, which would equate to less clarity for the market here. So we're going to see what happens. Again, that dot plot, and we'll watch even the Fed futures and a lot of bonds over the next few days. It is going to be important. We'll update you, but coming into everything, even after hours, like I even started the video with, like after hours, everything is on the high, like literally after hours right now, the high ticker is gassing. Like even there's a 1 minute bar or a 30-second bar, so just imagine that right now. But it is looking pretty bullish. There's still going to be a lot of questions, and the markets can still be choppy, especially with the virus. We're going to see how now some of those headlines start to come in. But despite the hawkish tilt that we saw, this was definitely a hawkish move by the Fed. I wouldn't underestimate the market to simply ignore everything and just just focus on employment, so that will just be the next thing they're going to spaz out on, and it'll buy them a month or two. So if nothing comes out, if there's no other scare, and we see this continue for a couple of days, and we even watch it with other names and a broad-based set of moves go up, that will confirm it. And then for the next quarter or so, we should know what our guidance is and what to watch for. Everything after that, I mean, earnings may be right around the corner, but finally, I'm gonna wrap it up, man. Our boy did good. Powell did good, okay? They moved the puck. They were able to get the ball rolling as far as showing that they're not, complacent about the inflation situation. They got the puck moving, or they got the ball moving, whatever you want to call it, but they did it without being brash. It wasn't aggressive. It wasn't surprising. It was enough. It's exactly what we needed right now at this moment. So only time will tell if this is the right move. Like I'm saying here, middle of next year, because the Fed has to be about 9 months ahead of things. So we will really find out whether or not this was the good move. For now, it is looking pretty decent. But coming into the company news and events now, Biden, he's backing the Senate voting rights bill as his economic plans begin to get stalled by Manchin. It's looking like they may not pass it till 2022. Honestly, there's a lot of back and forth. It seems like we've had a lot of progress in Congress and government, but when I get some of these headlines, it's like, wait, what's going on with it? So the economic bill may be actually delayed here. That's not the debt ceiling one, but we're going to keep our eye out for that and watch any of the infrastructure stocks or plays associated. And then Apple, after hours, they announced that they're scrapping their office return deadline and they're not setting a new date. Again, they closed down some of the stores and then the mask stuff yesterday, a couple of colleges yesterday, even overseas, Europe, and a lot of that. You are getting some virus reaction. So we will watch to see how this plays out with the market. And then Tesla, two different news stories. The first one, Tesla's crushing critics by suing them in China. So anybody who is going against them in China, they're suing them. They made this big article, but it's only two people. So they sued two people in China who were saying stuff bad about the company. But there was that. And then on the good news, NYPD, the New York Police Department, is considering purchasing 250 Model 3s to begin electrifying their police force. So that one should probably be good news there tomorrow. We'll see how that one plays out. And then United and Delta, they say that the pilot shortage is hurting the recovery. We did watch travel stocks do pretty decent here, so we'll see how that plays out. But there wasn't anything beyond Powell today. That was the main story, as well as now the virus. But the new story may be the Christmas rally, or if volatility returns. We'll see what the Grinch does. It's very straightforward. We're gonna have a lot of excitement. You've got to get that helmet on. There's gonna be moves, and if you think you missed it, you're wrong, because it's about to get crazy from here. So I hope you're ready. But that is pretty much it. So let us get into the plays. So right off the bat, I got 3 or 4 different stocks that I'm looking at coming into tomorrow. But we made a lot of plays today, and there's a lot that I still like that are not on this list. So like I said in the beginning, we're going to go over a lot of the open trades, and you'll see what I'm working with. But the first one I'm liking, I have an open trade on this, and the premium recovered a little bit today, but it's down. But it's NVIDIA, and I'm really, really liking it. If we get the bullishness now, tomorrow we got to see. People may be bullish. As long as we don't get no quick turnaround or volatility, we got to confirm it. But if we start to get those Santa Claus rally vibes, I think the winners are going to be good ones. And just don't forget, NVIDIA was that $1 trillion contender not too long ago. They had the good earnings. The premiums are lower, so I'm liking it. But there is also going to be a primary focus there on Apple as well tomorrow too. But I think they come next in line. I would kind of compare them to Microsoft, but Microsoft has, underperformed relatively in the last week or so. So I really like that NVIDIA play. We are still holding that one contract from, I believe, a week ago, and it's down 37% now. So that's what I'm saying. It still has work to do. We'll see after hours. Again, the after hours move, we want to watch the volatility there. Like if the bulls do come back, you will watch your premiums start to move. So that is going to be a driver there for tomorrow. But this is the one that I'm going to holding. I may add to another one or see if we could get a shorter term one that's cheaper, but that is going to be the first play. And then coming into the second play, I made a play on this one today, but Bank of America, one, it's finance play. You just had the Fed and all that. I'm pretty sure I played this almost every single time we've had a Fed release, and you guys have seen some of the volatility. Essentially, it's most likely going to move with some of the dollar bond moves. But what I did notice today, they were going up when the market was first selling off a little bit at the early moments of the release in the press conference. But then as the market started to go up, they either went with the market or held. So I think it's still too early to tell about the relative impact on the bank. I mean, the rates or the inflation should be able to help them to a degree, but there has been a lot of confusion lately. So we're going to see. But what I'm going to keep my eye out for, if anything with bonds or this market, if we do get bullish and people are expecting inflation and the rates aren't as much policy error moves, then you might watch the banks benefit like they did at the beginning of the year. So this was a big move that we saw, if you remember, and you're already seeing some of the rotational moves, but at the beginning of the year, they kind of ran up a little bit. This was the Fed meeting on the 28th or the 29th. They went down a little bit more, but then that is what just preceded the rally. A lot of things moved, but finance did do a lot. So the financial stocks. So going to be rocking out with that play. I think it'll be interesting. As far as the actual play, I grabbed 50 of the February 55 calls for 12 cents. So these are the ones further out the money. I could have gone closer, but they had premiums. The reason why I like this is that during the bullish move, a lot of the other premiums went up 10, 20%, but these ones just stayed the same. And that's because they're out of the money. But I made sure I got some time here. Essentially, if we get the real bullish rally here, and this is something to pay attention with the premiums, if the momentum stays bullish and we start to get, movements in the premiums, the far out of the monies or even out of the money works better. And what you'll notice here with the volatility, if it gets volatile, these back and forths, the at the monies, near the monies, those are the ones that have done a little bit better or are going to outperform. So I think this one is decent. We're going to be watching and holding that one out there. But that is the second play. And then coming into the third play, AMAT and LRCX. So it sucks if there's going to be a chip rally tomorrow because I got puts on these ones, and I kind of honestly, I've been getting sloppy in the mornings there. I got the price I wanted, but then I did 10 instead of 1, but I decided to hold it through, and then you'll see what I did about 20 minutes later. I said, well, if I'm going to ride this play out because it has a catalyst tomorrow, I was like, let me just sell one of my bigger SPY puts because this ended up being bigger, and I was like, well, this will give me exposure to the downside anyways, and it has a little bit more time. So I thought it was a good trade-off there, but that play sadly went down, but I do like the idea. Again, I'm just playing the potential news tomorrow. So if the Biden administration comes out with any sort of ban on SMI, and they've already banned a couple, or even some of those stocks, we'll see. A lot of the China stocks did get clapped today. I don't know if you guys watched NEO or your NEO puts on there, but those went up a lot. We have seen some escalation. So if that comes out, AMAT and LRCX, both of those plays will get affected. I think both of them, SMI is responsible for, I think, 50% of their business. So it would have a big impact there. But I grabbed 10 of the AMAT February 130 puts, $4 a pop. So $4,000. I think by the end of the day, I was down $1,700, $1,600 on that. And then I also got a weekly a little bit later. The next week, I got the 142 put for 230. That went down 69%. Again, little time got clapped. And then during or after Powell, I did grab one of these. This one went down like 20 or 30. We got on like the right before the pop. But then I went and got LRCX instead of averaging on the AMAT to get exposure to both. Grab one of the 585 puts for 655. And that is what I'm holding so far. We'll see how they play out. Again, going to be kind of risky, but I think we might see something. So I wouldn't be surprised to watch all the chip makers go up. If we get any bad news, I mean, we will see. But definitely a risk and more so of a gamble. So we'll find out. And then finally, Broadcom. This was that other fat finger play that we had, but I still like this one because it's a post-earnings winner. And the contracts are above the levels at the money. So if you come to the contracts, I'll pull them up right here and you could see these are the ones near the money. They're above where they were after that day after earnings. Again, if you even look at this stock, I mean, the chart itself looks bullish. You've recovered more than enough. Again, this is an earnings winner, high margin winner. There's a lot going on with it, but this is what I'm liking about tomorrow is that when I show you some of these contracts, you'll see this one's near the money above, out of the money, slightly above, getting further out the money is getting to that price. And then these ones now, it's just a $10 difference. The contracts are all $10 apart, but there is a substantial gap after like 670, 680. So that's what I was saying. I think the contracts are a little all over the place there. And if it does move tomorrow, that will be a bullish winner that I like. And essentially, if the prices stay like this in the morning, I'm going to make my average down on it. So those are the main plays as far as everything else. Here's everything we did today. I grabbed the AMATs and then I had Roblox put. So again, we got clapped on Roblo today. You can see my overall loss. It says only 2,000, but I was down almost 10,000 on the shares. But remember, this is why I grabbed some of these puts. And if you remember, I sold out some yesterday. If I held it one more day, it would have been better. I took 200 profit on that yesterday. These ones I was down on, so I pretty much came back to right around break even. I just got my money back, so I didn't make any money on this, but it expired on Friday. That's why I said, let me get my money back. The contract is only worth like $1 now. I got $3.70 for them, but that was the second play, and then I took about 20% on those SPY puts, got like 200, 300 bucks or something like that. Then I grabbed another one of the AMATs, and then the ABVI, those were up. I sold these out. They were up like 64%. Remember, we grabbed those the other day, so I took the profits on them. Remember, I do not like the out of the money ones on these. I want to see when ABVI kind of slows down. We'll see how it plays out. Again, healthcares and defensive have really been running here, so it could keep going up, but I'm pretty much just going to double dip once the IV goes down because ABVI has been on a tear. But if I miss out on a little, I will. I still love everything going on, and thankfully we got our shares. Then I grabbed 10 of these apples after the meeting, the 220s, grabbed them at 28 cents, sold them at 33. It was like 20 or 30%, got the flip. Then I got the LRCX. Then I bought a SPY put, a daily SPY put. I grabbed two of them at 67 cents. I flipped it 4 minutes later for $1.01. Was making small trades on there, and I even grabbed one for the end of the week. I spent it at 209 for a 463. I was like, let me get some as everything was going up. Then we got the Bank of Americas. Then I averaged down on that April 220 call on Airbnb for 555. So I remember I liked this price, but that was the one I even got clapped on it the other day. But even after hours, I think Airbnb is doing good. And then if you come back to the play from yesterday, this thing was down like 50% in the morning at one point, and then pretty much after everything, we're down 8%. So if they do have a gap up, these should be able to go up. I think it's almost in the money on this one. So we're going to see how those play out, but that's an open trade, and I like it. And then finally, I closed out of these other Roblox puts. So remember, I had 85s. This one was actually up 150 or 170%. So I netted like $2,500 profit. I was up like 3,000 or 4,000 earlier in the day, but then they bounced a little bit. I said, okay, want to make sure I book some of these profits. And again, coming back to the Roblox here, I still have another big set. These ones were up, but remember, I was down on these, but then they started to come back to life. So I said, let me sell out the other ones. I have a gain. We took that. And then remember, I have another 3,000 from the cover calls. So just as the stock is dropping, I plan to hold this thing. I'm just making money on both ways. Again, we missed out on this call. We got to take profits on the run-ups on other calls. And now those puts that I got, I've slowly scaled out of all of them except one big one. It's already dropped a little bit. This could protect me a little bit. We'll keep playing back and forth, but I am realizing profit. And now that's what's now setting me up into tomorrow and everything else. So that's what brings me to everything I'm holding now in the strategy. I didn't quite realize this, but looking at kind of how we've taken some of the profits here. So far, and this is not including the 2,000 or any of the other profits we took today, I've already realized about $4,200 in closed trades. So these are just realized profit that we've taken here. And now this is what I was comparing it to. I was saying, okay, what are some of the plays that I've grabbed so far in December? There's some that we're holding on the November call side. Again, I'm trying to outline if we go up or down. I know a couple of the puts that I have, and thankfully we have been taking profits along the way. We actually have way more calls than puts, believe it or not. That's why I want to highlight this, because I even calculated how much I'm down so far, and even some of the unrealized ones, even ones that have been clapped or fat fingered, it pretty much comes around to almost the same amount that I realized. So it's good because I didn't mean to balance it that well. I thought I would have been a little over leveraged, but it's looking a little decent. But that is at the current prices that they are at now. So if it does take a big dip, I could get clapped a little bit more. But like I'm saying, with some of the volatility on the upside, we should be able to ride these. And now this is what I'm holding. I got these Broadcoms. These are down 59%. And this is what I want to look for tomorrow, because like I'm saying, just like the Roblox, the minute, even if these come break even, if we're already doing good with the month and the profits, I just need to take profits and make sure I don't lose on any of these. These could all come back to be winners, and then my risk substantially drops, and then we're going to ride out a couple. But we got a couple of opportunities to hit, and this is what I'm holding. The Broadcoms, and then I got the NVIDIA calls down 37%, the Airbnb, the one from yesterday, and after the average down 10% down, but then the Januaries, these are down 70. Depending on how it plays tomorrow, I might try to do the trick, because now I wanted to make sure I got the ones with time. But if there's more volatility and I could do one one of those, get close to the money, flip that one and make more than what I'm down on this one, and then just leave the shitty one, I'm probably going to do that. So I'm going to be eyeing those two tomorrow. Then the Microsoft, remember this guy, we've been holding it for a while. Decent sized position. It came up today. Again, it's not counting the after hours move. This might come back to life, but that's another call that we're holding. The oracles, these ones scare me a little bit because they're further out of the money. You saw them today. They were only down like 100 or even like $50 at one point, but then they ended up dropping. But Oracle is starting to lead. So if those come back again with enough time, and if we just get continued momentum stringing together, you could see with enough time and a big enough move, these could come back. We just don't need volatility now. If we do get the bullish move, we need these to run through. This SPY, I'm down 127. That was the daily one from today. But then we took the other various profits on the other one. So I think we made well more than 200, even if I lose on that one. Then I got the Etsy. That one was from last month, but I'm still eyeing that as a call play. And then the AMAT, that is some of the downside play. And then everything else is shares here too, where we'll get some of the rebound from any of the crap that has been gone down, like UWMC, which killed us. But hopefully this helps. Hopefully you can see how I'm playing it out now, because we're just going to ride these out through. And I'm telling you my plan, if I just get even break even 10, 20%, we've already taken money on the profit side. We get some of the money that just went down after this little volatility. And then if we get a really big rally, we might be able to get a couple that we could really, really ride out. So that's what I'm going to be doing. That's what I'm holding. As far as everything else, watch all those chip maker plays, the banks, Airbnb, Abivai as well. And then I'm going to give you these ones, XLV, healthcare. This is what could be considered scary today, is that a lot of the things that ran up today, you know, tech did do good, but a lot of defensive sectors really, really rocketed. So pay attention. XLV, you could watch this throughout the day to just see how some of these industries are moving. XLE for energy, and then XLF for the bank stock. So keep these in mind, and you could see even how these are starting to tick up or not, and it gives you a better picture kind of how we've been moving. You see how the SPY's been kind of in the middle of all of it. So watch out for that. Then watch out for AMC, GME, any of the small caps, because if we are going to get a rally, I mean, you want to see the exuberance come back to those. That's going to show, you know, that maybe there's going to be a little bit more momentum. So watch out for that. Then Broadcom, I'm really, really liking for tomorrow. Microsoft, I just want him to come back alive. It looks like he's kind of ticking up after the after hours move. I'm assuming those premiums will come up, but we'll see. And then Apple as well too. It's just the winner. Focus on it. I mean, if it goes above 180, that'll be even crazy, but it is, the volume's crazy. People are liking it at the safe haven. If everything does get bullish, it could be good, but those premiums are really, really hard to move. Again, you saw the ones we made today. Even that one I flipped, I got it really, really early. I got it like right here, and then I flipped it like around here or something. It was like a small move, but then it kept going, and the premiums only went up another like 5-10% or something. So be on the lookout for that. And then finally, TLT and the dollar. The dollar, I mean, watch out if we drop on the dollar. Again, that's the first move. And then TLT, it is very hard to say, but if we're going to play out, if the market ends up liking this and treats it like the beginning of the year, we actually may see TLT go down. Essentially, if the next few days, if everybody likes what Powell has said, they may not start to price it as a policy error. Remember, TLT will go down if people are pricing in a policy error. An error would mean something is going to hit us in the face and he's going to have to adjust very, very soon. It doesn't look like Powell's going to take that stance. So then if you're going to be getting higher rates, it could lead to a higher move. But the yield curve did flatten today a little bit. So it's very weird. We got to watch it play out. Again, just watch out for the key levels. I think you could still be late and let the premium do its thing, and you should be able to get a deal. Let's just wait for our confirmation and you'll see what happens next. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shine. I need you to remember, got to do it 1,000 times before it gets any easier, baby. But the code loves you. I love you. I'm going to see you in the morning. Let's go.